Okay, so it's time to introduce you to the bat pattern. Now, the bat pattern isn't as popular or as known as the Gartley pattern. It's not as efficient as, say, a cipher pattern, but this is actually my favorite pattern to trade in the market because it offers such a good risk reward every time we take it. Now, like our other advanced patterns, the first step is to identify an impulse leg or an anchor leg. This is going to be considered our X to A move. Once this initial move is created and identified, we can then start to look for the rest of our criteria to be met. Step 2 is identifying the A to B move. After our initial X to A move is created, we will then look for price action to retrace and complete a valid B leg. For the B leg to be valid, price action must retrace to a minimum of a 50% Fibonacci retracement taken from the X to A leg. Now, it's important that this retracement does not touch the 618. Again, if even the wick of a candle touches the 618 Fibonacci retracement taken from X to A, then we have an invalid bat pattern and we're looking for a Gartley instead. Once our AB leg is complete, we can now look for a valid C leg. The market creates a valid C leg by completing a minimum of a 382 Fibonacci retracement taken from the A to B leg. This leg is still considered valid if it pushes down to the 50%, the 618, the 786, the 886, and even as deep as the A leg. As long as it doesn't push beyond the A leg, meaning the wick of the candle, this is a valid C leg. Again, we have to have a minimum of a 382 Fibonacci retracement, and as long as the wick of the candle doesn't push beyond the A leg, this is a valid C leg. Now, for our D pattern completion or our D leg completion, it's pretty simple for the bat pattern. The D leg is always going to complete at the 886. We don't have to worry about any ABCD pattern confluence, although if we get that, we can add that as a bonus. We don't have to worry about drawing in any Fibonacci extensions. However, if you want to and you get some confluence up there, again, you can add that as a bonus. All we're worried about is the 886 completion. So when the D leg touches the 886 completion, and that's a Fibonacci retracement taken from the X to the A leg, that is our selling point for the bat pattern. Okay, so now let's take a look and draw out the bat pattern step by step. Like any other advanced pattern, it all starts with an impulse or an anchor leg. So we're looking at a swing high to a swing low in this case. This is going to end up being our X to our A leg. What we want to do next is take our Fibonacci retracement, take that from our swing high, so our X leg, to our swing low, which is going to be our A leg. And then we're going to double click that, and we're going to need to bring in our minor Fibonacci point, which is going to be our 50%. And actually, I should probably leave the 618 in here. Now, to get a valid B leg for a bat pattern, price action needs to make its way up to at least the 50% of our X to A leg. If we touch the 618, it's going to be invalid. So even if the wick of this candle touches the 618, it's going to be a valid B leg for a bat pattern because, well, we know that the 618 is the criteria needed for our Gartley pattern. So price action needs to complete inside this level between 50% and 618 to give us a valid B leg. After that, we want to take our Fibonacci retracement tool once again. This time we're going to drag it from our swing low to our swing high, so our A to our B leg. And we're going to need to see a retracement of at least 382. So a minimum of a 382 Fibonacci retracement taken from our A to our B leg in order to get a valid C leg. Now, just like the Gartley, this C point can come down to a 50%, a 618, a 786, 886. As long as we don't break the A leg, as long as the wick of the candle doesn't push beyond the A leg, this is a valid C leg. For our bat pattern completion, for the completion of our final leg, our D point, pretty simple. We're looking for our bat pattern to complete at an 886 retracement from X to A. So the original Fibonacci retracement we drew on from our X to A leg, the one we used to measure out our B leg, we're looking for a completion at that 886 mark to have a valid bat pattern completion. Let's take a look at a bullish Gartley. So a bullish Gartley will be the exact opposite. We're still looking for our impulse or our anchor leg to start everything off. In this case, it's going to be our swing low to swing high, which is going to put our X leg down here and our A leg a little higher. Next step, taking our Fibonacci retracement tool, dragging that from our X leg, so our swing low, to our A leg, which is our swing high in this case. And again, I want to double click that. I want to bring in my 50% retracement. And to get a valid B leg, I need B to come at least to my 50%. Again, it can come anywhere in between, but if the wick of the candle touches the 618, then this is going to be an invalid bat pattern, and we'd be looking for a Gartley pattern instead. I then want to take my same Fibonacci retracement tool, drag that from my A leg to my B leg, so the swing high to the swing low of this recent move, and I'm looking for at least a 382 retracement here. And then finally, for my D completion, I'm going to take the same Fibonacci retracement I drew earlier from my X to my A. I'm going to go ahead and double click that, bring on my 886, so 88.6 Fibonacci retracement, and look for a bat pattern completion to come right down at that 886. Okay, so let's go through and see if we can spot some bat patterns in the actual market. Let's see what we have here. Looks like we may have one right here, if I can zoom in some. Alright, so we have our initial anchor leg starting up here, X to A. Our X leg represents our high, our A leg is going to be the low of this move. Next thing I want to do is bring in my Fibonacci retracement tool, go from my swing high of the X to my swing low to my A, and then I want to double click if I don't have it already out by default and bring in my 50% retracement. You can see that price action comes right to the 50% retracement, and all it has to do is touch it, meaning the wick of the candle has to touch it, and it makes it valid. And now I have a valid B leg. Boom. Next, I want to take that same Fibonacci retracement tool. I want this time take it from my A leg to my B leg. And remember, for a valid C, all I need is a 382 retracement, which we easily get. And as long as price action does not go below the A leg, then we have a valid C leg. So looking at our B to C right here, coming just to the 786. And for my D completion, I'm looking for price action to go right up into this 886. And you can see that in this case, it looks like we just get up to it. Give me a valid D leg, and therefore a valid bat pattern. Again, X to A, swing high to swing low, 50% retracement for our B leg. Our C leg comes to a minimum of a 382. In this case, it pushes down to the 618 and almost touches the 786, which is fine. And then my D completion point is going to be up here at my 886, which is the Fibonacci, the same original Fibonacci retracement I took from my X leg to my A leg. Let's see if we have another one. This one I don't think is going to come to the 50%. Nope. See if I can scroll through here some. Probably should have picked a few out before I started recording, but it's okay. This would be a good example of a failed one. You can see we get our 50% retracement up here. We don't quite hit the 618, so this would be a still valid 50% retracement. However, you can see price action never makes its way up to the 886. So we can still measure it out. We have our initial X to A. We have our A to B, which comes just looks like one tick below the 618. And again, as long as it doesn't touch it, it's still valid. So this would still be a valid bat pattern. If we're watching this move the market live, I'd look for a retracement for my C leg. So I'd bring my Fibonacci retracement on from swing low to swing high. And all it needs is a 382 retracement. So I'd have a valid C leg right here. And then I'd be looking for a decompletion up here at my 886, which unfortunately the market never gets. You can see we come down, push with our C, we then push up, breaking our B leg, and then as soon as we come back down to break this C leg, this would invalidate the pattern. And again, the pattern is invalidated because, well, we have our C completion, price action pushes up, it breaks past the B leg, higher high, higher close, as you can see here, and then we retrace right back down. So no longer going to be a potential bat pattern. And we just erase our charts and go back to the drawing board when that happens. All right, it's got to be one more in here somewhere. Nope. No, yep, looks like a bat. Maybe not the best looking one. Let me go back. All right, let's see if this one works. We have our initial impulse leg or anchor leg, swing high to swing low. It's a little choppy in here, but you can see this is still the same move. So we have our X to A. We then want to take our Fibonacci retracement tool, take that from our X leg to our A leg, double click that, bring in my 50% retracement. You can see that price action does indeed hit the 50%, doesn't come up to the 618, giving me a valid B leg. For my C leg, I'm going to take my Fibonacci retracement tool once again, this time from my A leg to my B completion point, and I'm looking for at least a 382, which we easily get. We actually push down to the 50% retracement. Again, as long as we don't push beyond our A leg, this is fine. Then for the decompletion, looking for price action to hit the 886. And the 886 is that same Fibonacci retracement, the original one we drew on, from our X to my A leg. And you can see, yet again, another valid bat pattern. Let's see if I can get one more. I'm out of space here on euro dollar. Let's go New Zealand dollar. I think I remember a bat pattern on here. Or actually, we can do a bigger one. I'd love to find a bullish one for you. If I can. Not going to be a 50% there. We actually have one right here. Let's see if you guys can identify it. Alright, so we have our initial anchor leg, X to A, swing high to swing low, our impulse leg I should say, since we do indeed break structure. So an impulse leg, X to A. Let's go ahead and get that on there. X down to A. Yep. There we go. Take my Fibonacci retracement tool from my X leg down to my A leg, looking for a 50%. You can see that price action hits the 50%, actually spikes up a little past it, but we come nowhere close to hitting the 618, which makes this still valid, giving me a valid B leg. Next, I'm going to take my Fibonacci retracement tool, this time draw it from my A up to my B. You can see price action easily pushes through the 382. This one comes a little deeper, through the 618, even a little bit past the 786. But again, as long as we don't break this A leg, it's still valid. So price action gives me a valid C leg down here. And then for my decompletion, looking for price to push up to the 886 Fibonacci retracement, taken from our X to my A leg, giving me a big one, but still a valid Gartley pattern. Now let me just see if I can find a bullish one for you, since just to give you an idea of what that looks like. We found a lot of bearish ones. And this may take me a while. We actually may have one in here. It looks like a busted one, but let's go down to the 60-minute chart. You can actually see another one right here, looks like. Yep, you can see another. This is actually a busted one. You can see another one in here. X to A to B, B to C, C to D comes right here. Actually, we'll go over targets in a little bit. Yeah, probably would have been stopped out on this one. So here's a broken one, but still a bat pattern, nonetheless. Just a loser. And there's nothing wrong with that. These patterns don't win all the time. But let's see if we can find a bullish one. A little difficult because these markets have been trending the same way for so long. Nope. And here looks like one. Again, this is probably going to be a busted one, but let's measure it out. We have our initial leg, X to A. Yep, and we actually come to a 618, so that's going to be a Gartley pattern. Let's look at this one in here. Nope. Hey, and this is part of the learning process, guys. Once you get used to this, finding this pattern, this is exactly what you need to be doing. Scrolling through charts, just looking for opportunities, taking those fibs out, measuring them, see if it works. If it does, and you've got a valid pattern. If you don't, then you go back to the drawing board. All right, here looks like one. This is going to end up being a busted one, but we're looking at, just make sure this is right. Nope, we break above X. Here's a good example of one that's invalid. We have our initial leg. Oops, wrong tool. We have our initial impulse leg. So we have our X to A. We have our A to B. We then retrace really deep for our C completion. But if you look closely, you'll see that price action actually spikes past our A leg by a single tick, making this an invalid pattern. And well, what happens after that? Price action comes down. Our bat pattern entry point would have been about right here, and we pushed past it. But because we followed our rules, because we were able to recognize that this is an invalid pattern, because we have that breach of our A point, and again, just the wick of this candle, and it's only by one tick, but every tick matters. This allows us to stay out of the trade and, well, protect ourselves against a loss that we otherwise would have taken. Okay, so I finally was able to find one here on pound yen. Had to go back to July. We'll find a bearish one or a bullish one on pound yen. But before I show you guys, let me just pause the tape for a second and see if you guys can recognize it. There's actually two of them here, if my eyes don't deceive me. All right, so we'll start with our initial one. And this is actually going to be another bearish one. We're looking at our anchor leg right here, our swing high to swing low, which is going to be our X to A. So let's go ahead and label that. X leg, swing high. Down to our swing low, which is our A leg. We're going to bring in our Fibonacci retracement tool. Swing high to swing low, so our X to our A. You can see that we don't hit the 618. We're above the 382. Let's just bring in our 50% retracement to make sure we do hit that. And indeed we do. As soon as we see this, we know we have a valid B leg, and we know that we should be on bat pattern alert. We then want to take a Fibonacci retracement. Let me just make this a little neater. We then want to take a Fibonacci retracement from our A leg to our B leg. Make sure we hit the 382. You can see we spike down, hit the 382, no problem. This example actually spikes all the way down to the 886, but again, as long as we don't break the A leg, we're going to have a valid pattern. So we have our C completion down here. And as always, our D completion, we're going to look for price action to come hit the 886, which it does right here, giving us a valid D leg and a bat pattern completion. And you can see this this pair actually rolls over pretty nicely for some pretty for target 1s and target 2s, which we'll go over in a little bit. But if you also notice this, right after this pattern forms, there's actually another one. Now, this C to D leg of our initial pattern will actually become the next impulse leg for another bat, and it may get a little confusing, but just just rewind the tape, pause it if you need to. But this C to D leg is actually a new impulse leg. So we're going to throw this C to D to the side for a little bit, and we're going to look at this as being a brand new X to A. We're then going to bring our Fibonacci retracements on from our swing high, or our swing low in this case, excuse me, our X leg to our A leg, and we're going to look for a 50% retracement. You can see price action spikes down, comes right to my 50%. And I'm actually going to, let me do this. Let's make this a different color so it stands out a little bit. Nope, that's not going to work. Let's make it pink. Pink, there we go. So our first one's going to be in blue, our second one's going to be in this beautiful shade of pink. But we have our X to A. We come down to a 50%, so we now have a valid B leg. We then want to take that Fibonacci retracement tool from our A leg to our B leg. You can see that we just come through a 382. Remember, all that has to happen is the wick of the candle needs to touch it to make it valid. So you can see the wicks of these candles hit our 382, giving us a valid C leg. And then our D completion, as always, we're looking at price action to come down to the 886, taken from our X to our A leg. And you can see bada boom, bada bing. As soon as I get these colors on, another bat pattern completion. And again, if you can't see the new one, let's make it a little clearer for you. X to A to B right here, a very short B to C, but valid, and then a D completion as the market comes down to this 886. Back-to-back bat patterns here on pound yen, and you can see they were both 2 target winners. So let's talk about targets for a while, targets and stops. And let's delete this. And we'll draw this on here. So we have our initial bat pattern. We have our X to A to B, B to C, and our D completion up here. X, A, B, C, and our D completion up here. Now our entry point for the bat pattern is going to be our 886 Fibonacci retracement taken from the X leg to the A leg. So right here in this case, 5028 would be our entry. Stops, same as the Gartley pattern. We want to take a Fibonacci extension tool. We want to invert it, so we're drawing it backwards. We're going to go from the swing low, our A leg, to the swing high of our X leg, back down, and we want to look for our 113 Fibonacci extension. I might have to shrink the charts up. So stops or entries are going to be right here at the 886. Stops are going to be right here at the 113 Fibonacci extension. And you can see it gives us a potential risk of about this much. Targets, we're going to take them the exact same way as the Gartley pattern. We're going to draw a Fibonacci retracement from our A leg to our D leg, and we're going to look for the 382 retracement as being our initial targets. So again, Fibonacci retracement from our A leg to our D leg, and we're looking for the 382 as our initial targets. And for target 2s, or second targets, we're going to look for the 618 retracement. So again, 382 retracement for target 1, 618 retracement for target 2. And again, you can see we get a pretty good risk reward here with the bat pattern because our entries are going to be so close to our X leg. Let's take a look at one more. We have our second bat pattern, and you can see this one actually rolls over, hits target 1. We never retrace so far up that that we get stopped at on trail stops, because remember, after target 1 is hit, we want to take our stop loss, we want to adjust it, and we want to move it down to break even so we can't lose money on the second half of our position. For our second bat pattern here, we have our X to A, our A to B right here. And I'll go ahead and make this a different color. We have our short B to C, and we have our CD completion down here at the 886, which comes in at 49.05. So our entry is right at 49.05. You can see the market just kisses it. And let me do this. X to A, A to B, B to C, C to D. For our stop loss, we want to take our Fibonacci extension tool. Fibonacci extension. We want to take that from our A leg to our X leg, so we're inverting it. And we're going to draw in our 113 Fibonacci extension. And let's make this a little thicker so it stands out. So our stop loss is going to go right here, giving us a potential stop or potential risk of only about this much. For targets, we want to take our Fibonacci retracement from our A leg down to our D leg. And for target 1s, we're looking at our 382 Fibonacci retracement. And for target 2s, we're looking at our 618 retracement. And again, you can see even the target 1, we get a great risk reward with this pattern because the completion is so close to our initial X leg. Almost a 2-to-1 on here, actually, if I move this over. Yeah. A 2-to-1 risk reward ratio, meaning that our potential profit on our first target is 2 times the amount or 2 times the length of our initial risk. And if you can get that consistently, all you have to do is really be a 50% trader, maybe even a little lower than that, and you can make tons of money. But again, as we watch the market move up, market hits our 886, our entry point. We spike up. We almost nip our 382 here. We finally break it right here. At that point, we roll our stops to our break-even point, so we can't lose money on the second half of our position. And then the price action eventually goes up to our 618, where we take the rest of our position off. So there you have it. That's the bat pattern. You can see why it's one of my favorites. Again, it's not the most popular out there. It's not, we don't see it as much as the cipher pattern, but it offers a very good risk reward. And well, when you find one, you need to take advantage of it.